Hello, 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 everyone. Good morning. Happy Wednesday. Happy last day of August. August done already. How is everyone doing today? Good morning, Davey. Good morning, Lauren. Good morning, Patrick. Good morning, George. Wrap up Wednesday. Good morning, Jacob. Good morning, Eric. Good morning, Ken C. Thank you, everybody, for being here. Ah. Coco, Coco, whose side are you on today's good morning option? Whose side are you on? That's pretty funny. Uh, we've already had some stuff out this morning. So if you are new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer term subscribers, you know what to do. Let's get straight into it. Mortgage applications, pretty hefty decline with the mortgage rate still climbing again after its brief dip back into the fours. We had Mester speaking from our Fed speaky, reinforcing, sees rates above 4%. Well, would like rates above 4% and then leaving them there next year, seeing unemployment rising to around 4%. By the way, the ADP revised up for June, but August coming in a lot lower. And the wage component of that was up big. Again, that's what Bob talked about yesterday with these wage components. I asked them if they're getting embedded. And yes, they are really getting embedded. How do you deal with embedded wages? Well, there's got to be layoffs, really, because people aren't generally going to take wage cuts. So that's where we're going. I mean, the Fed's got to target inflation going down, but unemployment going up with a recession. Even though they say, "Oh, we don't see a recession yet." PMI 15 minutes after the open. Let's see if it stays in expansion or contraction. That is minor. Crude numbers 9:30 Central, so pay attention to that. And then what do we have? Oh, goody, goody, goody. After the close, we got more Fed speak today. Pretty green morning going into the final trading day of the month, except for oil. Oil pulling back, actually stopping out that double bottom pattern, roughly 70-30 for the 75 basis point, and still in negative gamma, so you can still get accelerated moves, the upside and the downside. This morning, didn't really check anything. This is just for the point of completeness. After the close today, again, not much. Tomorrow is more so what I'll be focused on in the morning. That's where we sit. Remember, earnings season is winding down. So, morning, Chris. Let's get the show started by looking at the spiders. We'll get to them. Let's check the VIX. Oh, geez. It's very demanding this morning. By the way, you know what I want to start off with? Nice big gap down in BBBY. I hate to say told you so, but told you so. By the way, they're closing stores. They are killing some of their own brands off. And this is wonderful. This is why you don't want to trade in this garbage. Here's part of the risk disclosure. I just think this is humorous. Going to start off with Humorous Wednesday. Look at the top of this. Our management team may investors, they're doing a new share offering so they can issue more shares. Why would you buy? They're going to bankruptcy or reorg eventually. It's not good. And common stock will get wiped out if there's any bankruptcy proceedings. Our management team may invest or spend the proceeds of this offering in ways which you may not agree or in ways which may not yield a significant return. Are you going to rush out and buy shares of BBBY? That's in their risk disclosures. These shares may not yield a significant return, or we may spend it in ways you may not agree. The proceeds from this. Okay, not touching it. There you go. There's your humor for today. Anybody who's got diamond hands or says, oh, it's going to go to the moon. No, sorry. You know what? You deserve what's coming to you. All right, done with that. Somehow I knew you'd mention PPP. You know what? It's just amazing that you have ignorant people just willing to throw money at this garbage. All right, S&P, let's get through this stuff quickly. This did not come down low enough to hit the stop levels. I'm still watching these levels for today. Just a little pullback overnight, but turning up especially, it does favor a slight rally mode. If you want to play it on an intraday break, I'd be watching about 4,015, 40, 20, 20, 4,022, 431, 440. Remember, you still have a clear path. By the way, based off of yesterday's price action, you have the two breakdown zones as 40.15 from yesterday, and I'd keep in mind this other breakdown zone right by the second target. So I'd probably bring in the second target just a bit. On a rollover, we might be in the choppy to bullish side. You also have a clear path move, so I'd pay attention, though, to the upside. Key support about 39.95. You start breaking below that, I'm watching back down to 38.80. We're still longer term or more medium term. We favor another rollover play, but you have end of month dynamics coming in. We are coming out of oversold with daily cycles at the bottom, so we could easily see even a 1 or 2 day rally here. Do not be shocked. Even in bearish mode, do not be shocked by that. Oh, let me just get, if we do break down, thing above, if we do really break down below this 39.80, yesterday's lows to 39.54, then 39.39. Not much else to talk about. NASDAQ, first target hit, second target hit, little pullback, stalling out first target, now going towards the second target again. And it's getting above this thing, so I'm watching. 15, 523, next target area. What's beyond that? You have the next breakdown zone and end of the clear path move right up here. And you can put on your harmonics, retracement harmonics from this down move. So let's see how this all fits together. So the next target, especially we get the 15 minutes, 1 hour close above this. I'd be targeting the 12,555 to 12,574. Then above that, 12,607. Could it actually bounce that much? Yes, easily. Easily, given some negative gamma and end of month juice. With the text, especially to try to juice it up to make the end of month numbers look better. Good morning, John. So, the breakdown. This would really have to get back below. We got to look at both sides. There's now some support coming out at 12,450, 12,455, but can't get really into at all bearish mode again until about 12,380 to 12,400 to break down below that. That's the only way I can get into bearish mode given these numbers. By the way, the little mini double came down, stop it out. I've already revised it to the next double for the Dow, but the Dow was stopping out that mini double very weak. 32 is going to be the key resistance. Above there, not even on this bigger double, and it's a little sloppier because it's left-hand side, but I'd be targeting 32.082 on a break above 32.02, and then I'd use this 32.159. Dow's actually in the weaker, so I'd be focusing on the NASDAQ first on the rally mode. NASDAQ first on rally mode, then the S&P. Dow's pretty much last in line at this point for me. Can't get, though, bearish until back below about 31,700. So it'd just be in chop mode. Russell never had that double yesterday, but the double would trigger today above 1870. What's the exact number? 1872, 1883. You're going to see a couple key areas, though. That's the double in here is riskier for the Russell. And the Russell, again, first and second things I'm looking to, NASDAQ and S&P. Can't get bearish on the Russell until below 1851. So this could be more so caught in a pattern, and not liking that as much. If you have to trade to the upside, I've already said it, not gonna repeat it. What do we have here with the DAX? This does qualify as a double, not just for today, but you'd need, and it's lower probability since it is against the daily rotation zone. You'd need a close above 13,155. Other than that, not real interested. Key support though coming in about 12,830. Key resistance before that double triggers about 13,030. So that's your trading range for there. Notes. Then I promise we'll get to the Qs and the spiders. Notes. It's trying to put in a bottoming pattern here, sitting on hands. Nothing for this. It still has not stopped out the head and shoulders pattern. Dollar index still double. This is not a big enough rotation. This is still a one-side rotation, so double top still in play, but caught in a range. Not expecting major dollar action today with end of month. But the major resistance is about this 109.20. Key support now coming in about 108.42. Between that, it's just range trading. Crude, this, did it come down enough? Let me just double check. I didn't think it did earlier. No, it still needs that close below 89.23 or a trade below 88.06. So no stop yet in crude. No stop in crude. Still with that substantial pullback today, but no stop. So double still is in play unless you use the more aggressive stop levels. If you use the more aggressive stop levels, with the thing is it would have traded below that 75. Again, I favor the conservative stop overall. Just showing it for the point of completeness. And VIX. VIXY. Is that... No double there. No double top there, sorry. It would just be a break below here. A break below about 25.50. If it did break below 25.50, I'd just be targeting. It's not a double, so I'd be targeting about 24.11 on a breakdown. Other than that, the real thing I'm watching today is how it reacts at this 25.50 area. So that's about it, but that's not a double. It extended too far, but people will trade it on the breakdown below that. Let's see where we sit. Euro, I'm expecting consolidation. Nothing much has changed there going into month end. So the double still is in play unless we have another key rotation down. If this now rotates down, then it's a triple. Bitcoin, you do have a potential double, but that would just be a short-term corrective move. And interesting enough, you got the daily rotation zone in the way, so it is a lower probability. But your targets and your trigger, 12,505.82, 21,100, 21,364, 21,625. So that would just be a corrective bounce pattern. I'm looking then for, we should get another rollover play, that 87.5. Tesla triggered the double. Might get a little bounce play going in end of month. Your key resistance is about 287. And you want to watch other things. I mean, the stop level for that is a lot higher. 301.42 because it hasn't hit stop reduction. But right now, if you want to trade, if you're trying to eke out something to the upside, I'd just be using harmonics. Again, this 288.40, 289 area, yesterday's high. And then I'd be using 293, 298. Let's get to your spiders. Spiders. Again, now it's just a bounce play for the rollover. Let's get into shorter term price action. Second target virtually hit in a target area, but I'm expecting the next rollover play. 402.20, then 404.50. 404.50, do not ignore with this resistance ledge and the declining rotation zone. You can also put on your harmonics for this little swing down, and look, you're still reinforcing this area with the 37.5. So that's 404.50 to 404.98 on a stronger rally. Minor rally is still this 25% harmonic with this breakdown zone, 402, 402, 402.25. We're trading 450. So those are your two things. The upside, your key support, I just look at about 399. Other than that, yeah. Even if we get a multi-day rally in this, your next major resistance would be above this 404, 405, I'll call it 407, 408 roughly, which would be the 50% retracement of the last down move. The Qs, I'm going to bump this up just a hair. Let me just fine tune this a little more with the Qs. 303.75 and 306.13. So the bearish thing would be below 303.75 back to 301.85 to 302 on a rally 306.13. And you still have a little unfilled gap up here to 307.42. Other than that, your harmonics from here, 307.10 to 307.42, and then your major harmonics is not just in case you get a bigger rally going into also tomorrow, about 310 if you're trying to position something bigger than that. Today, I'd be really watching this 306.13 area. Of course, big pump and snap. Let's see. Layoffs are bullish. Wow. When this is, I mean, you put it in context, and it's still up 10%, which is absolutely insane off their announcement of layoffs, but it would just be looking for another short play and snap. By the way, your little double did play out really nicely. This will probably be another rollover play. This could be end of month window dressing too, to try to get all these damn stupid tech things. So that's what I just pay attention, especially in tech sector, for some pumping action today. Like Apple, I'd still watch if it does get a bigger rally on for this gap fill before the next rollover play. Nvidia still weak, very weak. Wow. When you can't even get that, that's very weak. That's telling. The strong dollar is reducing liquidity by 7% of global GDP. Yeah, strong dollar will do that, and it's not priced into. Our dollar's holding up really well, so third quarter earnings will get interesting. If Tesla closes today above yesterday's high, would that be a % B buy? Yes. Again, that would be, since looks like you're going to get the first cross of the rotation zone, that would be super aggressive at this point with a double top triggered. That would just be for a short-term continuation bounce. Boy, that would take a lot of chewing through, but is it possible in Tesla? Yes. Remember, % B buys against a trend, so this is against a double top. They are for just a short-term bounce, which could last even just a day. That's why I like them with the trend. That's why they test out, because a short-term bounce with the trend can turn into a longer-term bounce. But yes, it is. All right. Not much else to talk about this morning. So that's where we sit. Again, just be careful with negative gamma and end of month price action, that you could get some interesting moves and some rebalancing and strange moves today with some minor portfolio rebalancing. So don't force it. Don't do anything silly. Also remember, we're going into a long weekend. Tomorrow's, again, the first day of September, but Friday is non-farm payroll, and that's going to be a very key number because this is the last non-farm payroll before our Fed meeting in September, so they will be paying close attention to this non-farm payroll. And we have lower liquidity end of August, so we could get even strange moves through the end of this week. Please pay attention, but next week We'll get trading back in full force. Summer market's officially over after Labor Day. This is the last little vacation time, get everything wrapped up. Kids back at school. Next week, hit the ground running. So that's when we'll take some serious analysis and looking at some more macro positioning. You are welcome, Chris. I'll talk to everyone later. Have a great final day of August. See you after the close. Bye for now.